Hello, investors and traders, and welcome to the weekly market report. I'm AJMonte, Chief Market Strategist with Sticky Trades, and we have less than a minute before the market closes. So let me get right to the chart to do a recap, and then I will slow it down a bit as we hit the rewind button. Look at DIA. You can see we hit the downside target from last week at 329.84. So that was a score. Looking at IWM, I misreported this on the midweek report, but that downside target was 164.43, so that was a hit. Downside target on QQQ was hit as well at 351.36. SPY was also hit on Wednesday right down here at 418.18, and the VIX, we had a two-parter where I said we would move lower first. We did that, and then there we go. The market's closed. We hit the downside target on the VIX and the upside target on the very first day, and we made another attempt today to hit that high target. Now, let's go back and hit rewind so I could slow this down for you. Before we get into the geopolitical news and the economic news, let me just say that it's very important, especially now, that you keep an eye on the charts. Take out your trading checklist. Very important that you do that. You could see that we have a long stretch of red in these candles here after a bearish engulfing candle right here was on Wednesday. We have a very slight volume drop today. Not much to speak about, but that's still a slight drop in volume. And we have a positive divergence on the CCI. What does that mean? Well, if you look at the low from right here in comparison to where the CCI was down here, we have a much lower price low here with a higher low on the CCI. It's known as a positive divergence. Now, some of you may be surprised when you find out that my target is going to be to the upside, but that's exactly where I'm going. I'm going up to this roll reversal, former support turned to resistance right there. Just like what we saw back here. I could erase that roll reversal line right there and clean up the chart a bit, but I'm expecting the same thing. So this could mean a 500 to 600 point rally in the Dow next week, but don't get too cocky on the long side right there, because as I will soon show you, the moving averages are crossing over, and I think that the 50-period moving average is going to cross at the end of next week down below the 200. Let me just show you this real quickly right here. This is what I'm talking about. The green line is the 50-period moving average. The gray line is the 200. So if I project this out just in the same angle that we have right here, the 50 could cross the 200 right there. That's bringing us right to August 1st. And so the week after that, I think we could see algorithms pushing some sell orders back into the market. And that will be after this rally up here. I think we're going to rally up. Then as the moving averages cross, we could see a pullback right down to the lower levels. So that is what I'm expecting. Again, upside target on the diamonds at 329 exactly. And then I think we're going to see a drop in volume and a reversal from that particular point in time. Now let's go to IWM. This one is extremely oversold at this particular point in time. We do have a drop in volume. We here too have a positive divergence in the CCI. I think we're going to go a little bit higher in IWM. I'm not going to get crazy on that one because we have a resistance point right here from Tuesday. And so that's going to give us a little trouble on the upside. But the upside target is 166.47. That is for IWM. Now looking at the Qs. Again, another one that I think is oversold. We had a breakout below this key support level. I think we're going to see a rally back up to that former support, which will now be resistance. There's your roll reversal all over again. We see this happening just like we did back here. I could erase that now, clean the charts up at least a little bit. And I see upside at 351.05 on the Qs. Now, for those who are thinking about taking an aggressive long position, I would caution you on that. Our option traders are loaded up with put spreads. We would love to see this rally as we get into expiration Friday. As we roll the short sides, we're going to be taking in credits. If you don't know what I just said, then plug into Sticky Trades and learn how to trade options, because we have a very robust option training course that we're offering here, and the coaching that I do through the webinars will help you quite a bit. So again, upside target on QQQ, 351.05. Looking at SPY, this is also oversold. You see that drop in volume? See the oscillators showing this positive divergence? Again, something you shouldn't ignore. Well, as I magnify that, you can see that not only do we have a positive divergence, but we have a pivot point forming on the CCI. And the CCI is much more sensitive to pivot points than the stochastic. I think the stochastic will eventually pivot up. I could even forecast that for you, see how that works out. But as I back out just a little bit, notice where this support level is right here. From that low back in May and into June, July, right there, we have that key support level, and we stop dead on at that point. So my upside target on SPY is going to be just a little bit higher, not as aggressive as what we saw on the diamonds. But why am I dropping that line right there at 417.69? Look to the left as I draw to the right. That's why. My eye automatically picks up on these role reversals, and a lot of times when you see me drawing these targets, that's where I'm picking those targets up from. So again, I teach through repetition. Stick with us on YouTube, and you'll become a pro at technical analysis yourself. Just give it a little time and a lot of practice, and you'll be right there. Let's look at the VIX. Now, today, as we were moving into the final hour, this VIX was showing a bullish engulfing candle. And I was talking with one of our VIP clients, and I said that could be a problem because it's showing a conflict. If that closes with a bullish engulfing, it's going to go against what I think the spiders could do. And lo and behold, what happened? The VIX sold off towards the end of the day. We do not have a bullish engulfing. In fact, we have a pivot lower on the CCI. So what am I doing with the VIX? I'm going to go a little bit lower right here to that moving average. I will drop it right there. That will support the idea that I have behind the rally in the SPY and some of the other markets. Downside target on the VIX is right there at $19.32. So let's get to the geopolitical news. As you may know, the banks are still under pressure. Earlier this month, Bank of America announced closing 15 branches in 6 states. Wells Fargo also announced that they were closing branches. Now, here's my theory. I believe the banks, the big banks, the banks that are too big to fail, are lightening up a bit and getting ready and in preparation of a consolidation as the regional banks begin to fail, and I think they will for round 2 of bank failures. I think these bigger banks are going to scoop them up. So as they close their branches and accumulate more branches, all they have to do is change the name on the sign from whatever regional bank to Bank of America or Wells Fargo, and they have made the adjustment and just made a lateral move there. Now, in line with the banks, you have to keep an eye on what's happening with the European Central Bank. They are preparing for digital euros, and this is a multi-year project, but this is something I talk about all the time. There is an attack on the dollar. There's going to be an attack, I believe, soon, which could force a lot of the action into Bitcoin. Why? Because these are centralized digital currencies that would be coming in. Bitcoin will still remain decentralized, and I think that will be very attractive for the people who want to protect their privacy. Still a lot of time before this happens, but something you want to keep an eye on. Now, if you look at what's happening with the economy, Americans need, now this is according to Bloomberg here, Americans need $114,000 in annual income just to afford a typical home. A typical home. So that's going to put pressure on middle class that are making less than $114,000, because with interest rates going higher, the cost to carry a mortgage gets a lot higher. And again, this is just the average mean of the price of a home that's selling nowadays. Now, here's the big news. Today it was announced that the Israeli air and ground forces have intensified in the Gaza Strip. The invasion is on. And whether or not this is a very brief encounter or a brief strike, and then it starts to settle down early next week. We do not know. This is very hard to anticipate this, but I will tell you that it's making investors very nervous, obviously. So as investors are looking for safe havens, if you will, to park their money, the bond market looks very attractive. They start moving to cash because they don't know if they want to buy more of the golden stocks of like Apple and some of the other darlings of Wall Street. They start to look for safe haven. Option activity is picking up. We're having a great time, by the way. I don't want to rub that into the nose of some of our investor friends out there, but the option traders are having a good time. We're very relaxed. I hope you could join us and learn some of the option strategies that we're teaching here. But keep in mind that we are under a lot of pressure, not just in the financial markets, but as a global economy, we are all under pressure. This is going to affect the U.S. eventually. Stay calm, stay collected, stay prayerful. I'm very big about that. I'm not ashamed to throw that out there to the general population. I continue to pray. I ask you to pray with me because World War III is nothing to mess around with. It will affect everyone on the planet. So with that, I want to wish you a very good weekend. Stay in touch. We're lining up our January event. We're having a conference in Fort Myers, Florida. If you are interested, contact us at Sticky Trades. The first tickets go out to our VIP members first. Of course, they get top priority, and then the remaining seats will go out to the general public for sale. We're about 30% sold out already, and we've only launched that about a week ago. So the tickets will go very, very quickly, and I hope to meet you in Florida, Fort Myers in particular, and we could sit around the round table, talk about the market, talk about strategies, talk about your goals, and just make a lot of new friends. So with that, you have a great weekend, and we'll talk to you on the next video. So long.